Welcome to Breaking News to Trading Moves. Today we're looking at a pretty notable event, the attempted upsized U.S. IPO from a clinical stage oncology company, Aktis Oncology.
Yeah, this one definitely got people talking. It's a transaction that, sparked immediate discussion across the life sciences investment world.
It really did. So for you, our listener, our whole goal here is to get into the market implications of this. We want to identify the specific companies and sectors that might be positioned as winners and losers from this.
Okay, so to get why people are reacting, we first have to talk about the scale. Actis is targeting a big U.S. IPO. They're aiming to raise up to around $317.7 million.
$317 million, that's a big number.
It is, but the key detail, really, is the anchor investor. Eli Lilly has committed about $100 million of that total.
Wow. $100 million from Lilly. Well, that's not just a vote of confidence, it's a huge statement. And for everyone tracking, the expected ticker is AKTS.
Precisely. The deal size itself is big, but getting a commitment like that large, from a pharma heavyweight like Lilly, well, it's being read as a really powerful signal.
A signal that, what exactly?
That the major strategic players are ready to put serious capital to work.
Yeah.
And that could mean the door for these larger biotech capital raises is maybe swinging open again.
Okay, that makes sense. Let's start with the winners then, the immediate beneficiaries. If the market is reopening, I guess the first group in line are the ones who, make all this happen, the IPO gatekeepers.
Correct. The banks and the exchanges. For the underwriters, a larger IPO isn't just about bigger one-off fees. It's a signal. It renews confidence in the whole biotech pipeline.
Ah, so if this deal goes well.
If it goes well, it gives them solid proof to take to the next, dozen or so biotech companies that are just waiting in the wings.
So it's not just the commission from this one deal. It's about the health of their entire deal pipeline for the next 6, maybe 12 months.
Exactly. And the venues themselves, like Nasdaq, they benefit from more listing fees and, maybe more importantly, future trading volume if the new deals keep coming.
So which specific names are we watching in this infrastructure group?
The main ones tied to this deal and the ones that would benefit from this kind of optimism are JPMorgan Chase, ticker JPM, Bank of America, ticker BAC, and Toronto Dominion Bank, ticker TD. And of course, the exchange itself, Nasdaq, that's ticker NDAQ. It always does well when the deal window is seen as open.
Okay, that covers the infrastructure. But I want to go back to Lilly's $100 million commitment. I mean, on one hand, it validates the science at Aktis. But doesn't anchoring a deal so aggressively, doesn't that sort of create an artificial signal and maybe inflate the valuation?
That's a really important distinction to make. It absolutely creates a halo effect, a strong one. But the move itself is also about strategic control. By anchoring with such a large check, Eli Lilly, ticker LLY, is making sure it gets a substantial stake. We're talking maybe in the range of 30%. This isn't just an endorsement. It's about securing influence over the platform. It's about making sure they are first in line for any future partnership or even an acquisition.
So that leads us to our second category of winners, the big pharma oncology deal makers. It's not just a sign of market health. It's proof that the big players are actively staking claims.
Absolutely. Lilly's move just reinforces that big pharma is still very hungry for exposure to next-generation science. And that supports broader optimism for, future partnering and M&A activity all across the sector.
It almost de-risks the field for others, right?
It does. It makes it easier for other large companies to justify their own big investments.
And who are some of the other companies that might see Lilly's move as a green light for their own oncology plans?
Well, Merck, ticker MRK, is one of the majors that gets mentioned. The thinking is pretty straightforward. If one of your biggest competitors is willing to put this much capital on the line for a next-gen therapy, you have to stay just as active to keep pace.
Okay, so the underwriters win. The big strategic players win. Now, let's get more specific. Let's talk about the actual science here. This capital is going into a very specialized niche, Radiopharma.
Right. We're moving into Radiopharma, or nuclear medicine.
So before we get into who wins here, can you just give us a quick primer for anyone who isn't familiar? What exactly is Radiopharma?
Of course. Think of it like precision targeting, but with radiation. These therapies use a radioisotope, that's a tiny radioactive particle, and they attach it to a targeting molecule. It could be a peptide, an antibody. And this molecule acts like a guided missile. It's designed to seek out only the cancer cells.
A guided missile for cancer. That's a very clear way to put it.
And once it attaches, the radioisotope releases radiation that destroys the tumor cells right there, locally, which minimizes damage to the healthy tissue around it.
It makes the appeal obvious. And Aktis is in this space.
Exactly. They operate in what's called Theranostics, which combines therapeutics and diagnostics. So if investors pour money into the AKTS IPO, it validates this whole technology pathway, which in turn can lift the sentiment for all the public companies that are focused on radiopharma.
So success for Aktis could raise the tide for everyone in that boat, basically. It attracts capital that maybe wasn't looking at the sector before. Which publicly traded companies should we be watching for that kind of sympathetic lift?
The ones that could see a positive read-through are the other players in the space. You'd want to monitor Lantheus Holdings, that's ticker LAADH. Also Prospective Therapeutics, ticker CATX, and Radiopharm Theranostics, ticker RADX. A successful launch for Aktis could translate into some upward movement or, volume spikes for these names. It would show that investors are buying into the whole niche.
Okay, that covers the beneficiaries pretty well, people who get capital or validation. Now I have to flip the coin. Let's look at the groups that might be on the other side of this. In a competitive market, capital is a bit of a zero-sum game, right?
It often is. And this brings us to the segment that feels what you could call the capital pull. The first group under pressure is the capital-hungry small-cap biotech cohort.
And why would a big, successful IPO make life harder for smaller, cash-burning companies?
Well, you can think of the IPO as this huge new reservoir that's suddenly pulling water away from all the smaller streams. That water is risk capital.
Right.
Aktis, with its size and Lilly's backing, it becomes the new, shiny destination for investors looking to make those early-stage bets. And that pulls capital away from dozens of small-cap companies that are constantly trying to raise money just to keep the lights on.
And the new listing has that novelty factor, plus the perceived safety of Lilly's due diligence. It makes it a lot harder for the little guys to make their case.
That's it, exactly. And it immediately raises anxiety about dilution across that whole small-cap group.
Right.
Investors start to worry that these companies will have to raise money at lower valuations or accept tougher terms just to compete for those scarce dollars.
Are there any specific names that have been mentioned as potentially feeling this squeeze?
Some names cited as facing this dynamic include Samo Biotechnology, ticker SANA, also Fate Therapeutics, ticker FATE, and Caribou Biosciences, ticker CRBU. They were already in a tough spot trying to attract capital, and now there's a very strong new competitor for that money.
And it's not just the small caps needing cash. There's another group that's affected by this shift in attention, right? The recent biotech IPO cohort.
Yes, the ones who just went public themselves in the last few quarters.
Why are they under pressure?
Because the market only has so much attention to give. And a major new listing like Aktis just temporarily steals the spotlight. Crucially, it diverts trading volume and marginal bids away from other recent IPOs that are still trying to find their footing in the public markets.
So they need that visibility, that consistent liquidity to stabilize their share price. But Aktis is now dominating the entire conversation.
That's it. Some examples of companies in this group that might feel that pull would be Maplite Therapeutics, ticker MPLT, Evamune, ticker EVMN, and LB Pharmaceuticals, ticker LBRX. They had their moment, their debut, but now the public focus and the trading volume has moved on to the next big thing.
Okay, so far the losing side has been about capital flows and investor attention. Let's pivot now to the direct competitive landscape. Aktis is focused on a very specific therapeutic target. That must put some established companies directly in the competitive crosshairs.
It does. This is all about the competition around what are called ADCs and the Nectin-4 target. Aktis is heavily focused on Nectin-4, which is a known cancer target. When a well-funded, high-profile new company comes into that specific area, it immediately sets a new measuring stick for everyone else.
So Aktis becomes the new benchmark, and the market is now forced to compare every other Nectin-4 therapy against the one that Lilly just put its money behind.
That is the pressure point. The market will now focus intently on who has the best story, the best efficacy, the best safety profile, the best patient selection. If you're working in that same area, you now have to prove you're either better than or at least highly complementary to this new standard.
And that kind of pressure can really weigh on a stock until there's clear clinical data to differentiate which players are feeling that intensified spotlight right now.
We see this affecting several companies that have existing Nectin-4 programs or, similar mechanisms like antibody-drug conjugates or ADCs. The names mentioned are Pfizer, ticker PFE, Innate Pharma, ticker IPHA, and Aptevo Therapeutics, ticker APVO. The immediate challenge for them is to communicate how their platforms are different or better than the approach from Aktis.
This has been a very complete picture of the market reaction. So for our listener who's watching this unfold, what are the key things they should watch over the next few weeks? How do we tell if this is a sustained market reopening or just a successful one-off deal driven by Lilly?
There are 4 key things to monitor. First, watch the final pricing of AKTS. Is it at the high end of its $16 to $18 range, or even above? That shows strong demand. Second, track its trading performance over the first 1 to 3 days.
Right, the immediate aftermath.
A strong debut where the stock holds well above its issue price would confirm some real risk-on sentiment for biotech. But if it breaks that issue price quickly, that tells you the positive feeling was pretty short-lived.
And what about the second-order effects, particularly with the strategic anchor with Lilly?
You should look for any follow-on headlines about Radiopharma partnerships, especially any involving Eli Lilly, LOY. If Lilly makes another move in this space or partners up with Aktis, it validates their commitment beyond just this initial IPO check.
Okay, and finally, the effect on the Radiopharma segment we talked about.
Yes. Monitor the read-through to the Radiopharma competitors, the comps. So that's Perspective Therapeutics, CATX, Radiopharm Theranostics, RADX, and Lantheus Holdings, LNTH. You want to look for a lasting sympathy move, not just a one-day blip. Or, consistent volume spikes in those stocks. That will tell you if capital is really flowing into the whole sector and not just chasing the new thing.
Those are excellent points to watch as this all plays out. Thank you for walking us through the specific winners and losers from this Aktis IPO attempt.
My pleasure.
And before we close, here is the required disclaimer. This is not financial advice or buy or sell recommendations. This is purely the opinion of the author. Thank you for joining us on Breaking News to Trading Moves. We hope this analysis helps you understand the complex flows of capital that get triggered by major market events. We'll be tracking these groups closely. Until next time.